Hi everyone, Scott Schweiger back with another Tuesday tax tip. Last week we dug into the employer retention credit changes for 2021, including the fact that you can still claim it. I'm sticking with tax credits this week to highlight the Work Opportunity Tax Credit. While many people thought that this credit was going to go away because it was supposed to, it never actually has, thanks to the Consolidated Appropriations Act of 2021. Great. So, what is it? Well, it's a federal tax credit available to help employers for hiring individuals from certain targeted groups. The idea here is to lower the barriers of employment for these individuals. How much is this credit worth? Well, it's dependent on the wages paid to the eligible employees, but in general, it's 25% of the wages with a wage limit of $6,000, so $2,400 per employee. The credit rate can change with various factors, the main one being the number of hours worked. An employee will qualify for a reduced rate at 120 hours worked and the full rate at 400 hours worked. But depending on the targeted group they're in, the credit rate and the wage limit can vary. For example, a long-term unemployed veteran has a credit rate of 40% and a wage limit of $24,000 for a max credit of $9,600. All right, so that's great. What are these targeted categories? Well, there's qualified veterans, qualified ex-felons, qualified summer youth employees, qualified SNAP recipients, qualified supplemental security income recipients or SSI recipients, qualified long-term family assistance recipients, qualified long-term unemployment recipients, and a few other targeted groups that are a little technical to explain. Notice all the qualifieds in there. That's because there's specific qualifications aside just being in those groups in general. That's great, but this seems complex. And that's why there's services out there that will help screen and keep the necessary paperwork for you in order to claim this credit. But in general, if you're going at it alone and you have one of these targeted group hires, you have to have your state's workforce agency certify the employees eligible. And you do this by submitting Form 8850 to request them to do that. So that's the Work Opportunity Tax Credit in a nutshell. Obviously, this is just an overview, and how this tip will impact you depends on your particular set of facts and circumstances, like if you have a business with employees, or if you have employees that are in these targeted groups that qualify for the Work Opportunity Tax Credit. If you have specific questions, please reach out to your advisor or feel free to contact me. Thanks so much for watching, and I hope you join me next week for another Tuesday Tax Tip.